Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. And how should investors be positioned for the third quarter? AXA IM Chief Investment Officer Chris Iggo joins me to discuss. Chris, it's great to have you back with us. Welcome to Trade Talks.
Yeah, thanks for having me.
And Chris, with an election on the horizon, we're in the midst of dealing with COVID-19. The U.S. economy is opening and re-shutting down, halting some of those reopenings. How should investors be positioned for the third quarter? Because it seems as if the stock market is completely disconnected from what we're seeing on the macro side.
Yeah, I mean, we've definitely had a V-shaped recovery in markets. If you look at any credit sector or most equity markets, we've seen a very strong recovery in the second quarter. And behind that was the massive policy support we got from the Fed and other central banks. Plus, we've had this slow but very positive reopening of the global economy. Looking forward, though, I think the momentum may slow down. We're already seeing problems with perhaps opening up economies too quickly, particularly in parts of the US. And we're not going to get any new big policy initiatives. So I think returns should be less than they were in the second quarter, but still positive as we get towards that more normal economic situation.
Well, Chris, here we are sitting on Monday, July 6th. The Nasdaq 100 is continuing to hit another all-time high. S&P basically where it was prior to the COVID-19 lockdowns. Do you think the markets are just going to continue to ignore rising infection rates?
No, I think equity markets particularly are looking forward. So we've had, a great run and the Fed's been very supportive. Companies have been able to refinance their debt and raise new money. That's kept them alive. And while they're alive, they can look forward to when earnings start to pick up. And I think particularly in tech and other kind of growth sectors, we've seen a strong performance. We're looking at how the economy is changing going forward, and investors are really betting on that earnings growth coming through.
What about the U.S. election coming into focus? Because no doubt there's going to be a lot of headlines and market movement around that.
Yeah, I guess that creates some uncertainties, and I think we'll see volatility picking up again as we get closer to the date, particularly if the result does look quite uncertain. The polls are moving in one direction maybe at the moment, but there's still quite a way to go. So I think that will be an issue that creates volatility, but I don't think it derails the rally. I think looking beyond November and into 2021, markets can still perform.
Let's wrap up with the fixed income market, Chris, and credit. You think that remains the best bet for investors?
Absolutely. The Fed's there with a very significant backstop. Leverage has gone up, and we are seeing downgrades across the whole credit universe. But companies are still able to hold cash on their balance sheet. They're paying much lower in coupons on their debt. And for investors, I think it's a fairly safe investment. You're getting 100 basis points above treasuries. And in higher yield, you're getting 600 basis points above Treasury, yet the credit backstop from the Fed is there. And I think that will remain in place for some time to come.
All right, Chris, great to catch up with you as always. Thanks for joining us on Trade Talks.
Thanks, Jill. Bye-bye.
And thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.